Welcome to this brief introduction to the Deferred Sales Trust. I am Kevin O'Brien, founder of Creative Financial Strategies, and your host for this introductory presentation. Creative Financial Strategies is an independently owned and operated registered investment advisory and financial planning firm formed in 1996 in response to the need for true wealth management services. The CFS process brings together essential services addressing asset management, tax mitigation, wealth transfer, asset protection, and charitable planning. We are excited to introduce the Deferred Sales Trust, a unique opportunity for those individuals looking to maximize the sale value of their business, professional practice, commercial real estate, and other investment assets. So what exactly is the Deferred Sales Trust? We have found that owners of highly appreciated assets are often reluctant to sell because of the capital gains taxes inherent in such a transaction. With the Deferred Sales Trust, we can provide a potential solution. The DST, as it's known, can allow a seller to defer capital gains taxes on the sale of most any type of highly appreciated asset. Facing the reality of capital gains taxes that will eat up between 30 and 50% of the sale price of a business, the seller has four choices to consider. These would include choosing not to sell, selling and paying the tax, entering into a 1031 exchange, or employing the Deferred Sales Trust. So how does the Deferred Sales Trust work? Let's return to our example of the business owner looking to sell to enable his retirement. In step one, we would introduce our client to an independent third-party DST trustee to whom the business is offered for purchase. Then in step two, the trustee, in exchange for a secured DST installment note, buys the business on behalf of the seller's Deferred Sales Trust. Please note that no money changes hands at this point. There's no constructive receipt, therefore there's no tax liability for the seller. In step three, the trustee then sells that business to a cash buyer. The trust sells the business for the exact amount the trust paid. Again, no tax liability. In step four, the buyer's funds are received by the trust. In step five, we show the client working with CFS to develop and approve a solid financial plan and an asset allocation for the DST portfolio. In step six, the DST portfolio provides cash flow to the trust, and in step seven, the trustee makes installment payments to the note holder in the amount and for the duration selected by the note holder. Let's take, for example, a business sale. The business is selling for $5 million and the owner has a $1 million cost basis. There would be a $4 million gain, which would be federally taxed at 20%, plus Medicare taxes of 3.8%, perhaps state capital gains taxes as well. And in many cases, there's a strong possibility that there could be depreciation recapture, increasing the tax rate to 25% of that portion of the gain. Disregarding the depreciation recapture calculation, the estimated taxes on the sale of a $5 million property with a $1 million cost basis could be as much as $952,000. Imagine having almost another $1 million in your investment portfolio to generate your future income or to reinvest in another business or real estate venture. The DST can defer capital gains taxes on the sale of almost any type of highly appreciated asset, including business and professional practices, commercial real estate, investment properties, high-end primary residences, major stock positions, and valuable artwork and collectibles. With the DST, you can even invest back into real estate or new business. The DST process from start to finish. Should you feel that the DST might make sense for you and your situation, we would start the process with an introductory call between our DST trustee, a member of the Campbell Law Firm, and the CFS team. If following that call you determine that DST is a good solution, the Campbell Law Firm will provide a non-binding engagement agreement for your signature. Questions regarding the specific concerns, investments, and CPA questions are all discussed in the next step. Then the DST trust is prepared and proper language is provided to assure the success of the DST. We then move forward towards the sale of the asset to the trust and then to the ultimate buyer. In anticipation of receiving the DST funds, the client completes a risk tolerance questionnaire to guide CFS in the development of your investment policy statement, which guides the formulation of an appropriate investment portfolio by CFS. Once invested, the seller, now note holder, will receive installment payments based on a schedule determined with your DST trustee and CFS based upon your particular needs. On a recurring basis, regular reviews will be conducted with CFS, the note holder, and our DST trustee to monitor the note, the collateral, and the investment performance. Are you ready to get started by digging a little deeper into the DST? Please visit mydstplan.com/CFSINC to obtain an initial analysis of your potential tax savings when using the Deferred Sales Trust. Do you still have questions? Are you not quite sure? Please feel free to reach out to me by telephone or email. I will be happy to address all of your questions and concerns, and thank you for spending the time to learn a little bit more about the Deferred Sales Trust.